Hi everyone, hope you're all doing well, and today we're going to talk about three stocks that are down huge. Today these stocks are making big moves downwards, and yeah, one of them in particular is down double figures, and the other two are down a fair chunk as well. So we're going to do a little bit of a look into these companies, kind of talk about this news, what my thoughts are on these current news and the drop, and if I'm going to buy any of these opportunities. So if you could smash the like button if you're new, subscribe, and we'll go take a look at these three stocks. So number one is Boohoo. Isn't it typical that I do the three UK stocks to buy, and within the few hours of uploading it goes out of date because there's a new news article out that has moved the stock. It's typical. The amount of times that I actually record videos and then I upload, say I record them in the morning, by the time I go to upload them at say night time, and there's a news article that's completely changed the stock and it's out of date. Yeah, it happens quite a bit, and that was kind of like one yesterday. Not too bad, but yeah, it's crazy how many times that has happened. But anyway, that's my rant over for today. So Boohoo, we were talking yesterday about it being on a bit of a dip, and today it's gone on even more of a dip than where it was yesterday. So if we just look at the stock right now, it was actually down even more. At one point it was down over 7%, and it has put a slight bit of recovery as the day has gone on. So there's a few people buying this little dip in Boohoo. Now, what was the news with Boohoo? I'm pretty sure most of you have seen what's kind of going on here. Basically, there's some more news coming out saying that workers in Leicester, where Boohoo get a lot of their products made, in the textile industry, are still being exploited. So, if you probably know what's going on with Boohoo, you'll know they've got a history of basically they get a lot of suppliers in Leicester to make their products, and what has happened quite often is a lot of these suppliers, and even some of these suppliers, are subcontracting to other suppliers, and has been coming out over the last year that a lot of these workers have not been getting paid a minimum wage. Now, even though this is not directly a problem for Boohoo, because it's not their company that is doing this, Boohoo's name is always getting pulled into it because they are using their services, and also that Boohoo is, let's be honest, the better name of selling articles, getting people to read articles, and for the media to use. So it comes a bit of a problem that Boohoo maybe should be actually, as well as that, they should probably be looking into their suppliers a little bit more than what they do. But realistically, this isn't exactly effective with Boohoo, but still, when these media articles are coming out, it is affecting the share price. So it is a bit of a strange situation, because you look at the situation and go, yeah, Boohoo should be doing a better job, but it's not directly to do with Boohoo. Now, what has actually come out is that one of their suppliers they're using is still paying below the minimum wage, which is the big thing that I kind of wanted Boohoo to kind of stop and get involved in these articles, even though, like I said earlier, how much does it actually rely on Boohoo? And it's their problem. Unfortunately, I think every time that these sort of articles do come out, it is pulling Boohoo down on the share price, so they do have to try and improve it as much as they can. Now, they have made a lot of things to try and improve what has kind of gone on with the whole Leicester situation. Obviously, they brought a lot of management in to kind of manage the situation, and actually, if I just go on, they have responded to this already, and when they've done the independent review here, they've also done a supplier list, a lot more an approved supplier list, and also they go to visit a lot of these locations, also managing their financial records. A whistleblower helpline has been set up at every supplier, and they tried to do a lot. I think they're also building, obviously, the model factory as well, of how factories should be set up in Leicester, and they are trying to do their best to kind of manage this situation as much as they can. And let's not forget, this isn't Boohoo's job, Like I said previously, sure, it's good for them to kind of manage the supply lines, but, at what point does this actually not be Boohoo's problems? At what point does this kind of go to, the government, and the government should be making sure that everyone's getting paid a minimum wage? And it's like, where does the line actually stop, where it's actually Boohoo's problem, and they always get pulled into it? Because they are trying to make a lot of improvements. Now, just to put this into context of how they're actually getting past Boohoo and all these new things they've put in place, if we actually have a look here, the worker that came out and kind of said all this claims they get paid £3.50 an hour. But actually, when we look at what kind of goes on here, and this is probably how they're getting past Boohoo, is that the boss on the actual payslip is actually paying her the right amount, but then he's telling her to withdraw the cash that's being paid into her and return it back to the factory. So I don't know exactly how I feel about this situation, because obviously these are really sneaky ways of getting around it. You know, how are Boohoo supposed to know? And once again, I can't make this actually shout this out even more. This is Boohoo going above and beyond where they actually need to get concerned with a lot of the situation. If Boohoo are actually looking around and going, oh, for us to put you on our approved supplier list, can we see everyone's pay slip and make sure you're paying everyone? They show the pay slips in there, and everything, they're happy with that. How are Boohoo supposed to avoid these situations where there's actual people that are these bosses that are actually going, oh, paying people and saying, you know, oh, you need to come bring your pay back after we paid you it? Like, I don't know. I just think it's a really tricky situation, because I always said that if there was any more negativity with this sort of company, that with this sort of stuff, that I'd actually look to probably move out of my position. And now I'm looking at it, and I was really happy with the improvements that Boohoo made, and there hasn't been any kind of big stories really until now. And I look at that sort of situation and go, realistically, what more can Boohoo do here? You know, at what point is this out of Boohoo's hands where all this is going on? And it's tricky. It's a really tricky situation, and I'm kind of still thinking about what I'm going to do in this situation, because the big thing that I'm worried about is that if Boohoo keeps getting pulled into this sort of thing, what might happen is a lot of investors or the institutions won't buy the shares, or they will sell out the shares. But I did actually have a quick through the institutions a little bit earlier on. And what we do have is a lot of insider buying here. As you can see, there's a lot of insider buying, which is a really positive sign. And then I went into like the big kind of holdings into this company. And if you look here, there's 1, 2, 3, 4, 4 insiders currently selling out the company. I mean, I don't know if you can count that 0.26. It's pretty small. Same here, 1.55. It's pretty small. I mean, the only big one that's kind of the big sell here is the Goldman Sachs one. But look here, you know, you got 1, 2, 3, 4, 5, 6, 7, 8, 9 actual insiders actually increasing the positions, and the positions that are increasing are a lot more. You know, 8, 19, 4, 15, 46, 46. I mean, 2, 26. You know, these are a lot more bigger increases than decreases, and there's a lot more insiders actually increasing the position than decreasing the position. So I don't know. My big worry about, you know, insiders selling a lot of positions, I don't know if it's actually going on that much. So I don't know. I'm still very unsure on what I'm kind of going to do with this whole situation. And once again, I'm very unsure how much I can still blame Boohoo, because, you know, these are really intense ways that people are getting past this to get on the approved supplier list. And once again, you know, this is Boohoo are trying their best to kind of solve the situation, but I mean, what more can they do? But at the same time, will this carry on affecting the share price? It could do. So I'm still, at the moment, I can't give you I'm actually making this video and I don't really have a decision about where I kind of think about where my long-term outlook is. I still think I'm going to hold my shares. My question is that when it gets probably around to £3.50, which is normally where I kind of trim a position, is where do I trim my position or do I sell out my position? And that's the only big thing that I've got kind of thinking about, and I've still not decided. In terms of buying, I am not going to buy any more shares until my average is around about £2.40, £2.45. So I am kind of thinking if the share price kind of drops, that's when I'll probably consider buying more below my average. I don't want to average up right now. I feel like the risk to reward, I think I'm going to just wait and see if I get a big reward to buy some more. So I'm not currently buying on this dip right now, but I did buy some earlier in the week. So that also kind of levels it out a little bit. And also, if I just look at the share price, you can see when it does get caught in these sort of situations that it does tend to bleed for a few days. So you can see here, from this drop here, this was nearly like, it took two or 3 weeks for the actual company to kind of stop bleeding out from a lot of these situations. Same here, if I can just go from the 5th here all the way down here, you see here this was nearly a month. So when previously these sort of situations have come up in these sort of companies, it doesn't tend to be like a one day and it's kind of like done drop. With these Boohoo drops, after this sort of stuff comes out, it normally tends to go on for kind of like a good couple of weeks. So yeah, I'm going to actually gamble on this one and see if there's going to be a lower drop before I continue buying. But yeah, that's kind of where I'm at with Boohoo anyway. The next one is Pinterest. So Pinterest brought some earnings out and they weren't taken that well, even though the numbers were pretty strong. If we look at the company today, it's down 17%. Now, it was actually down like over 20% in pre-market. So it has kind of recovered a little bit from here. But the thing is what you got to remember with Pinterest is that it's really benefited from the CV situation. So as you guys probably know, if you've been on the channel for a bit of a long time now, I started buying this company originally around 2019. I must have started buying around the $25 range. My average is currently $23. I've actually sold half of my position since this time here because it has been on a good run. And when I sold my position, I made around about 200 and 300% of my position, which is really good. I'm happy that I took that decision. I took that decision just because I thought it's been on a good run, the valuation's high, and the numbers are going to be really hard to beat. Even though the numbers have been really hard to beat, they've kind of been spooked by active users. But that's always why, if your company's been on a good run, it's at a high valuation, it's never too bad to take profit, and I'm glad I took a bit of profit from here now. But I still hold some shares. Some of the shares I have since 2019, I'm still up on my position if I can just find an average of $23 here. So yeah, I'm up about, I think I'm actually, my actual position is actually only up about 130%, even though it says here 154%, but I'm still up a really good chunk on this stock. And this is the big thing is, don't forget this company has been on a really good run. And the big difference I have from when I first started buying shares in Pinterest, obviously getting on to nearly 2 years ago, now is that this company was trading at like a 3-4 price sales ratio. Now this company is like 20 price sales ratio, and it's a lot harder for the company to keep on that high valuation that it does have. And that's the big thing, it's been on a good run. It is at the highest valuation it has ever been at, and it's going to have a slower year for sure on the active users as well. So I think it's just that this is going to be more of a correction year for Pinterest, and that's why I sold about half my position. But in the long term, I still think it's a fantastic company, and that's why I never sold completely everything. And if it was to keep going lower, then I might buy some, we'll see. Now the actual numbers itself were actually really strong, like I said. So if we look at non-GAAP EPS 0.25 beats by 12, and GAAP EPS of 0.10 and beats by 11. That was really, really good EPS beats. Revenue 125% growth, which is fantastic, and beat by 51 million. This is where the drop happened. So global monthly active users rose 9%, but US monthly active users fell 5%. So we knew, the numbers are going to be really hard to beat for Pinterest, and it was punished because of the drop in monthly active users. International users though were strong at 13%, which was really good, and overall the monthly active users were pretty good. Now let's not forget that I think that Snapchat actually grew at 5%. So even though these are taken negative, they're still stronger than Snapchat's, I believe. But Snapchat, I do believe, do them a little bit more different to Pinterest. So it's thing with Pinterest is with a lot of these companies, it's really hard to compare like their actually users, because a lot of them do like daily active users, monthly active users, and weekly active. They're just so different comparisons. So yeah, but I'm just saying overall, like in context, it wasn't too bad. And I think Facebook's were still, I think theirs were like 7% as well. So overall, like, it's actually not terrible numbers growth. I think the big one is the US actually like decreasing, but it just shows you, when we look at the financials were just so impressive. The revenue was so impressive, but it got punished on this one number here. And if the thing is, I'm looking at this and going, realistically, this company's growing very well on profit and revenue, but because of the one little number that it wasn't good enough, it got punished huge amount. And I think that's just because of the valuation it's at, the run it's been on, and as well as all that. I think that the one big worrying thing I did have, and this is why I'm actually probably not going to buy shares at the moment at this sort of price, is that if they're going to get punished on just the US monthly active users, I think that could happen for the next few quarters, because everyone's been at home. This is how short mindseted that Wall Street is they're not bothered that the company just grew profit at a huge amount or revenue at a huge amount. It's looking at one number and thinking, oh, it's the end of the world because this one number's gone down. And the thing is like this is how short-minded like Wall Street is. It's just ignored everything like that, and they don't realize that you're going on numbers where everyone's been at home for literally the last 12 months, and now we're opening back up. Of course, monthly active users are going to fall a little bit and not be as strong, but long term, you look at the company and it's performing very well on profit and revenue growth, and it's like you have to be a bit cautious that Wall Street's going to be this short-term minded, and this could actually go on for like the next 2-3 quarters. And if that happens, are they going to drop again on more and more earnings? And that's just the big concern I do have with this company, even though it's performing. This is why I didn't really panic sell, because I looked at the company and thought financially they're still really strong as well. It is worth saying, and also look at the growth here in the actual earnings. It is worth saying as well, they kind of put a little bit of an outlook here, saying that their Q3 could also have here, if you look, US monthly active users declining again. So yeah, that could be a bit of a worry. So yeah, overall, I'm not buying just because it's still at big, massive valuations, and also that if Wall Street are going to be this short-minded, then the next two quarters are probably going to be horrible on user growth, and the stock might get punished again. But I'm still holding long because the financials are still pretty good. So yeah, that's where I'm at with Pinterest overall. Amazon down 7%, and they came in with earnings once again. Wall Street being very short-minded once again, kind of not realizing, oh, everyone was ordering online last year. What do you mean? So numbers are going to be really weak for the next kind of few quarters, or we're going to punish the stock. Like Wall Street once again overlooking how these companies are going to perform in the next kind of few quarters, because they've got really hard numbers to beat, and not thinking about how these companies are going to do in the long term. Amazon for me is going to be amazing long term. It's got really hard numbers to beat. That's the only problem. But EPS was good. Revenue was still pretty decent at 27%. I thought that was pretty strong, but they did miss slightly. But I think the big thing is the outlook, which kind of made it look a bit weak, was only to grow 10 to 16%. But once again, really, really hard numbers to beat. But I think it was just the outlook that kind of spooked a lot of Wall Street here. I think the big thing as well is that everyone's kind of looking at Amazon a little bit now and going, are we going to get this split? And I think every quarter that we don't get a split announced, it might just hold it back a little bit. So yeah, we'll see what happens. Obviously, I think that was Andy Jassi's first quarter as a CEO. But yeah, I think overall, Amazon in the next 2, 3, 4, 5 years, it's solid. It's just got hard numbers to beat, a bit like a Pinterest, and just a bit of Wall Street being a little bit short-minded, I guess, with that one. I do think, though, it would be a very wise decision for Amazon to announce a split in the share price. You've seen, the results of Apple, Nvidia, Tesla, and the benefits it's had for them. It would make sense for me to do it. Hopefully they do it next quarter. I think that would be what also Wall Street are kind of expecting as well, is every time they don't announce it, they get a little disappointed. And let's not forget as well that Amazon, once again, a bit like the Pinterest, it's had a very good run. It's a bit of a high valuation, so any kind of little numbers that aren't perfect, the stocks sometimes get punished at these sort of valuations, which you just got to be careful of. So yeah, overall, those are 3 stocks that are down huge, and a little bit of a recap on all of them. And funny enough, even though I normally say that when stocks are down huge, I am normally going to go buy them, at the moment I'm not buying any of them, but I still think they're very good companies. Like I said, Boohoo for me has to go lower. Pinterest, once again, I'm still up a huge amount on that one. It has to go lower for me to buy. And Amazon, once again, I'm still pretty decent, not decent, I'm up a little bit on that one. And it would have to go a little bit lower for me to consider buying that one. But yeah, hope you enjoyed that little recap. I didn't know which one to do, so let's do all 3 of them, and hope that was useful. So if you could smash the like button, if you're new, subscribe, and I'll see you next video.